So welcome back to my channel. So let's start with fair value gap. Okay, then I will tell you that why your fair value gap and order blocks are not working in the market. So if you look at the fair value gap, fair value, and if you look at the name fair value gap, it means the gap which you are getting it in fair value. So for example, a gap which is in a discount, for if you're taking a buy like over here, a gap which is in a discount zone is a fair value gap. Okay, so that's why a fair value gap is of like two types. If you can look at over here, there was a draw on liquidity over here, and then market pushes towards the upside, and there was this gap over here. Okay, so now what we'll do is like we'll take a buy at the starting of this fair value gap, and our stop loss will be below this. So this is what the fair value gap is. And now there are lots of other fair value gaps like BC, CB, and like there are lots of gaps. Okay, there's one more gap which is like imbalance and all of that. The thing is, make it simple, right? So that's why I try to make it simple. So over here, for me, when I see a break of structure or change of character, okay, then if there is something like a gap, that if there is a gap in that leg, that will be a fair value gap for me. So for example, if you look at over here, okay, the market was going up. Wait, hold on, the market was going up, down, okay, and then it gave a break of structure towards the downside, and there was a fair value gap over here, and it was a breaker block over here. Okay, and now this goes and retests this fair value gap, the fair value gap which is right over here. Okay, there was another fair value gap over here, but there was a breaker block over here, so because of that, price got reflected from here. So now the thing is, which I'm trying to say is that this fair value gap worked. Okay, and now there's another fair value gap which doesn't work. Okay, so for example, if you look at over here, market was making high this low so over here get a low, and then it gave another change of character. If you look at over here closely, this is a swing high. If you have seen ICT Mentorship 2022, the 10th episode, I guess, in that thing he says that the fair value gap where is the wick like this, that's a swing high. Okay, so that's why there's a change of character right over here. And if you go in 1 minute time frame, you will see a really good structure over here, so you can easily spot the change of character. So this is a change of character over here, and there was a fair value gap also. So like this is a fair value gap over here, but what happens, it gives a rejection from here, and there was another fair value gap over here. Okay, but what happens after that? Price kept on falling from there. Okay, price kept on falling from there. And why that thing happened? That thing happened because you went against the bias. Okay, whenever you're against the bias or whenever you're against the order flow, okay, your fair value gap will not work. And the same goes with the order block. When you're with the order flow or you have a good narrative of a higher time frame, then only your order block or fair value gap will work. Okay, fair value gap is like a gap which is in a fair value. If you're looking for buys, a gap which is in a discount zone. Like, and how we will look for that? Where is the discount zone? So look at over here. If fair value gap which is below of this 50 zone, like this one, okay, it's a real good gap. It's a fair value gap. Okay, over here, this gap was of a fair value gap over here. But the thing is, price got rejected from this gap because there was a breaker block over here. Okay, because as you can see that price went up, down, up, and then it goes down. So this candle is a breaker block. Okay, so it rejected from that block, this breaker block. Okay, so now this is the fair value gap. Okay, but this fair value gap doesn't work because you're against the bias. So that's why you should know the bias is important, and not even the bias. If you cannot predict the whole daily bias or 4H bias, just predict the short-term trend. So whenever you're against the bias, your fair value gap will not work, and your order block will also not work. So if you look at over here at this example, so now what's the order block? So you have understood that what's the fair value gap? Fair value gap is a gap which is in a fair value. Okay, if it is bullish, it will be in a discount zone, and if it is bearish, it will be in a premium zone. Okay, so what do you mean by that? I should show the example of the premium zone also. So if you look at over here closely, this is a 0.5 level. Okay, but price went above of that, so the gap which is above of the 0.5 level, which is this gap over here, okay, this gap will be our fair value gap. And see how price retest from that and kept on falling. So this is what fair value gap is called. Okay, for me there are lots of more fair value gaps which ICT teaches, but this one I use, okay, because I try to keep it simple. And now let's go on order block. Now what's the order block? Order block is a candle which is responsible to take the stop losses. So if you look into this example, price gave a market structure shift towards the upside, and now this candle structural low is a swing low, right? Because it is a short-term low in the left of it and a short-term low in the right of it. Okay, so now this is a swing low. So when people will see this type of move towards the upside, they will think that this is a support, right? This is a support zone, or this candle right over here, this doji candle, is a demand zone. So now if you look at over here, this candle was the first one to take the stop losses. Okay, and this is a bearish candle. Okay, so now this candle took the stop losses, and there was a big structural move towards the upside. So this candle will be our order block. Okay, it's not like any candle is a order block. Like whenever, so for example, like whenever price moves, the opposite candle will be our order block. Like in this situation, when price goes down, now this candle is order block. No, when a candle has taken the liquidity, that candle will be the order block for us. Okay, that's the order block. So now this works over here, but the order block works over here, but it will not work if you think like this. So over here, if you can see it, you can see that there was a market structure shift right over here. Okay, because you can see that this lower low, then it created a higher high, higher low, higher high, higher low, and higher high. Okay, so now normal people, they will think that this candle right over here is our order block. Okay, this candle is not our order block. This candle is a demand zone. Okay, because people have mixed up the smart money concepts and retail, like not retail, like supply and demand a little bit. So this is a demand zone, this is not order block. Okay, because this candle is not responsible to take any stop losses or any liquidity. This is a normal candle. This is the last downward candles in a bullish move. So this is a demand zone, not order block. But people think that this is order block, and then they will make it as order block, and they will try to buy it from here. But what happens after that? It's like a stop loss. So the thing which I'm saying, that if you're against the bias, your order block and everything will not work. And if price has not taken liquidity, price has not done the liquidity sweep, okay, then your fair value gap and order block will not work. So if you look at over here, why this example worked, why this fair value gap worked, okay, this fair value gap worked because price has taken the low of previous day's afternoon session. The afternoon session. The price went down and took the low of the afternoon session, okay. So that's why this fair value gap worked over here. Why this fair value gap? Why, think about it, why this fair value gap doesn't work, like this fair value gap which is right over here, because not this gap is not in the fair value and this is an imbalance. But still, if you open it on 1 minute time frame, because it's a 5 minute time frame chart, if you open it in a 1 minute time frame, this will be a very good fair value gap, okay. But why this doesn't work? Because the high time frame narrative is, because the high time frame narrative tells that price has taken the sell side liquidity. So that's why it will not work. So that's why this fair value gap worked, because first price went down and took the liquidity. And what I told you, that what's the order block? A candle which is responsible to take the stop losses. So if you look at over here, this big candle was the only candle which was responsible to take the stop losses, which was under this low. So now this candle will be our order block for us. So if you can look, that price came down till this order block. The wicks were really down, but it respected this starting of this candle, and then it moved toward the upside, okay, because this candle was responsible to take the what you call the stop losses. So that's why if there is no liquidity sweep, or if there is no liquidity taken, or there is no liquidity grab, don't look for fair value gap and order blocks, okay, because your order block and fair value gap will not work if there is no liquidity sweep, okay. So now if you look in this example also, why this order block worked, okay, there's no fair value gap also over here, it's like all packed, but there's no but then also this candle worked, because this candle took the stop losses below, which was below this structural low, right? So that's why this candle worked and this order block worked. So in this example our order block worked, in this example also our order block, our fair value gap worked. But the thing is that the fair value gap over here and the order block, which people say that this is not order block, but then also people say it didn't work because it was against the bias and there was no liquidity run, okay. So now you should look for liquidity run, and then you should look for fair value gap. You should write this down. Don't go there and just be like that. Whenever you see a break of structure, or whenever you see a move, you see that price is going up and you see a change of character and you're seeing fair value gap, just take entry. No, your first priority should be the stop loss hunt. Your first priority should be, you should look for price to go and see the price should go and take the stop losses, then only look for fair value gap, like in this example. So now I should tell you that what will be your top down approach, okay, that how your thing will work. So first thing we should do is, I'll show you like this. Wait, hold on. So 3 Nasdaq, let's show you on Nasdaq. I think so, it's probably going on right now, like look at over here, it's going on right now. Yeah, this is a good example. Okay, look at over here, this candle and this candle was responsible for taking the stop losses which was below of this structure, right? So now what you will do is, suppose you are right over here, okay, now what you will do is you will wait for price to first go and take the stop losses like this, okay. So when you will see that price has gone down, so your thing is, whenever you open it, so you are starting your trading session, okay, so you are in a pre-market, you're in a pre-markets and you're just looking for that how you can make money. So what the thing which you will do whenever you are about to take trade, just mark the supply and demands, support and resistance, because those are the liquidity pools, and then try and wait for price like this to go and take the stop losses. Then look for entry from fair value gap and order block, okay. So if you look at over here, these two candles are order block, okay. If you buy, and now you'll say why these two candles are order block, because these two candles were responsible to take the stop losses which was below of this structural low, right? So now, and you will say why, because if you have gone through of that ICT mentorship 2022, the consecutive candles in a stop loss in liquidity is also an order block, okay. So these two candles will be our order block. So if you want to enter from order block, you can enter from here, okay, and your stop loss will be below this, all right. And now if you want to enter from a fair value gap, if I zoom in a little bit, you can see that there is a fair value gap also right over here, and this fair value gap also worked. Like think about, like this fair value gap also worked over here, like this. It just prices went a little bit below that fair value gap. I think so it went till over this gap. Yeah, this is advanced, but this is buy side, what you call it, the BC or CB, okay. I will bring out some easy name, okay, I will bring out some easy name, but I know how this is, but I don't remember the names because I want to make it simple. So because of this fair value gap, it went up. So now look at over here, this fair value gap worked over here and the order block also worked. But the thing, if you look at in this price leg, this fair value gap over here, it gave a rejection from that fair value gap, but the thing is it didn't work. Like price went up and it took all the stop loss which was above of the structural high. Why this fair value gap doesn't work? Because this swing didn't took any liquidity. There is no liquidity over here. If this swing was right over here and it would have taken these two relative equal highs, and then if you would have saw any fair value gap in this liquidity price leg, okay, if you would have seen any fair value gap in this price leg, then you would have entered from here and then you would have got a good entry. But the first priority will be to look for the stop loss hunt, okay. But instead of happening over here, it happened over here. So there is no what you call it, there is no liquidity over here, okay. There was another fair value gap imbalance, or it's not a fair value gap, it's imbalance. So that's why it didn't work over here, this fair value gap, and the order block also didn't work. But some people will think that this candle is an order block, okay. It's not order block, it's the supply zone, so that's why it didn't work, okay. So now I hope you understood that why your order block and fair value gap doesn't work. It doesn't work because you're against the bias, you're against the order flow, or you're against the short-term trend. The short-term trend, when price went down and took this low, the short-term trend was bullish from at this moment, like from 740, it was bullish. Okay, you should not look for a bearish move, because you can see clearly that price went up, made a breakout structure over here. Now people will look for bias from this fair value gap, right? Because they will think that this is in a fair value gap. This is a very good fair value gap because it's in a fair value, and they will pull up their optimal trade entry, and they will look for the entry from 705 level, and they will think, yo, like there's a fair value gap also, and there is this 705 level also of optimal trade entry over here, plus there is a order block also, so this will be the best trade, so I should take it. But what happens after that? Price goes down, takes all of their stop losses, and then it goes up, right? So that's what I'm trying to say. You should wait for the price to go and take the extreme zone, like extreme structure, like extreme downward structure over here. So it went down to that, then look for your order blocks and fair value gaps. Okay, so I hope you understood. So now I hope you understood this thing. So now I should tell you that how you should look for short-term bias or trend, like short-term trend, or like what will be your daily bias. So if you're trading on a 5-minute time frame, look for what's going on on 15-minute time frame. Okay, if you're trading on 5-minute time frame, because if you're trading on 5-minute time frame and you're trying to look at what's happening in a weekly time frame, then it's like, then it will be more complicated for you, because you have to funnel that narrative like so many times. Okay, so instead of that, look at the 15-minute chart, because 15-minute chart is a well-weathered chart. You can do swing trading also with it, you can do scalping also, anything. Okay, that's the 15-minute chart is really good. Okay, so look at the 15-minute chart, and now at 15-minute chart, look for the swing highs and swing lows. So over here, this was the swing high, and this was the swing low. Sorry, look for support and resistance, not swing high, swing low. This is the low, so this was a support, and this was the resistance. So now if this is a support, and then people will mark this as a demand zone over here, okay, and they can see a rejection from this demand zone in this candle. But what happens after that? Price goes down, takes all the stop losses at 740 over here, 730, 740. At this moment, you will start looking for fair value gaps on a 5-minute time frame or an order block. If there's no fair value gap, look for order block. Okay, but see closely. What was our first priority? To look for the liquidity sweep. Okay, so the liquidity sweep was done over here, and now we can see a fair value gap over here and a this order block also here. So you can enter right over here at this candle at 825, and after that you can see the price went up and took this high. Okay, so I hope you understood this one. And from this, if you're on a 15-minute chart, just look for the bias move. And now I should show you some more examples, 1 or 2 examples more. Okay, like look it over here also. So you're on a 15-minute time frame, and now you can see that price is created these two relative equal lows right over here, right? Like there were these two relative equal lows. But what happened after that? There's a liquidity sweep right from here. If you go on 5-minute time, what was the time? So it's like 12 o'clock. So it's in a 5-minute time frame. So now you look it over here closely. Price made a higher high, higher low, higher high. Okay, so now people are thinking that this candle price should not go below of this structure, and all of the people's stop losses will be below of this structural low. The people, those who took buy over here, those who took buy over here, or somewhere around over here, their stop losses will be below of this structural low. And the new guys, those who took a buy just now after seeing a breakout, they'll take a buy somewhere around over here or at the starting of this candle. But what happens? Price goes down and takes the stop losses first. So when price will take the stop losses, now that's the time for you guys to start looking for order blocks and fair value gaps. Okay, so now if you look at over here, this candle was responsible to take the stop losses, which was below of this structure, right? So now this candle will be our order block. Okay, the price didn't contain order block, it just only retraced from the fair value gap, which was right over here. Okay, and then it kept on moving forward, and then it just went up. Okay, so you can take an entry from a fair value gap. If you would have taken the entry from a fair value gap, you would have got triggered over here, or you would have got a limit over here, and it would have taken you in. But if you would have taken a trade from the starting of this order block right over here, you would have not got an entry. But like this, you can do, wait, hold on, you can do this, and you can target for 1:2 or 1:3 like this. But the thing is, don't look for fair value gap when there is no liquidity sweep like this. Okay, and it happens every day. If you look at in this, it's a 5-minute time frame. If you go in a smaller time frame, there will be more entries. This was like NFP. Okay, and it's that old example, the same thing over here. Okay, it went down of these structural lows, all of these lows, previous day low, wait, like this. So when it went down, took all the stop losses. You can see in your charts that price has taken all the stop losses which was below of this low, below of the support. Now look for your fair value gap and order block. So now this candle was responsible to take the stop losses which below of the structure. So that's why this candle will be our order block. Okay, this candle will be our order block. And if you go on 1-minute time frame, there are consecutive candles. Okay, so what I told you, if you look into that ICT's video of Internship 2022, he says the consecutive candles are also order block. Okay, when if those consecutive candles are in liquidity pool, or they are responsible to take the stop losses. So now you can see that there are 5 candles, but on 5-minute time frame it's 1 candle. Okay, so that's why we will take this as our order block. And now you can take entry from the starting of this order block, and your stop loss can be below this structure, or you can take an entry from this fair value gap right over here. Okay, and then you can see what happened. Price went up and took this high over here, and if you would have held it overnight, price went up and took this high also. See, went up and took this high also. So this is what I'm trying to explain. So how you will get to know that what's the bias? You should look for the liquidity on 15-minute time frame. Okay, because 15-minute time frame can give you an overview that where's market is going ahead. So on 15-minute time frame, if you are stuck in 15-minute time frame that you're not able to predict the bias, then go on 1-inch time frame. Okay, and if you're not able to predict the bias on 1 inch time frame, go on 4 inch time frame. But the thing which you have to do is you have to do the same. If you're on a 1 inch time frame, okay, mark these highs, because these highs are like resistance and this low is support. Okay, so like this how it is. So this is a support and this is a resistance. But what happens, it takes the stop losses from the support and then it go and did a liquidity run in resistance. So I hope you understood this one. And now you will say that if this strategy is so good, so why you are explaining this and that then everybody will know this strategy and then this strategy will stop working. Like this, what the question comes. The thing is, no matter what, okay, if I write down this strategy and if I paste it and if I just distribute the templates all over the internet and like whatever, but the thing is then also if you don't have a good risk management and psychology, you will still lose money with this strategy. And not with this strategy, any strategy on this YouTube and anything, you lose money if you don't have a good, fine risk management on the basis of your capital and a good psychology. Okay, because psychology is important. You should know that how much you should risk, how much risk will affect you psychologically, and like you should know about that. Okay, so that's why the thing I say that, because me also till now this date I just look for psychology videos. Okay, I don't look for strategy no more. Like I just look for psychology videos because I want to keep on updating my psychology about the markets, and because that's why the Trading in the Zone and the Dr. David Paul speech and like all of those videos are like they are like really good thing. You should go into that and you should look at, because if a strategy is really good, you can make money with supply and demand, you can make money with support and resistance, you can make money with trend line, you can make money with indicator, anything. If your psychology and risk management is really good, okay. But to maintain that psychology and risk management, that's why you need a little bit good strategy which has a little bit higher win rate. So that will help you to maintain it, right? Because if the strategy is really, because in trend line you will hit lots of time, you will hit stop losses, so it will be hard for you to maintain a risk management. But if you know a strategy which is really good at a win rate, it wins 5 times or 6 times or 7 times with a 70% win rate, then it will be easy for you to maintain a risk management and a psychology. So that's why this strategy is important, because this will help you to maintain your risk management and psychology, and the win rate is higher in this. Okay.